All right, good morning, everybody. Just getting things kind of set up here. All right, welcome to the Hurley Investments Trade Findings and Adjustments. Jim, Jeff, good to see you. Dave, good to see you guys. Good morning to the rest of you. Let's get started. So, just gonna go over some quick things this morning. Not a lot to say, but just to kind of go over some of the things we talked about last time, as we usually do. We talked about rolling some of the puts we had that were nicely in the money after earnings. We needed to roll those out and roll them down to book a nice profit on a few things. And still have some level of protection at a lower strike price, just in case things kept going down. So why did we roll 102 puts on Disney down to 92, and why did we roll 9 strike puts down to 750? So this was where uh, 9 strike down to 750 on Under Armour earnings. Um, they really didn't do bad on their earnings, but the market didn't really agree. So it went down. Here is the 18th was when we looked to roll those down. Rolled that down to 750. The thought was at a somewhat of a support level, but just on the off chance that um, we started to head up a bit, we wanted to book that profit. If you have puts in the money, they're going to make more money on the as obviously as the stock falls down, but they'll lose money quicker if the stock starts to go back up. Kind of makes sense, right? So if we rolled those down to 750, the 750s are cheaper. We book a nice profit and we lose less money if it decides to go up. So why did we keep protection on it all? So a couple things. I'll go to Disney now. Could have made an excuse to, or at least a reason to take protection off. They really didn't do bad on their earnings. Just kind of the perception. If you want to know more about how the earnings went, you can go back, to the either Kevin's webinars on the market commentary the last couple of weeks, or one of mine on, I guess, the 18th. But I don't think my video actually recorded for whatever reason, so I don't think I have one from last week. Unfortunately, it's kind of a bummer. So anyway, so I won't go over the earnings so much. We already did that. So why roll down and continue to protect? Well, we have a debt ceiling issue that still is unresolved. And I'll put why keep protection on? So the unresolved debt, I'll say government. Debt ceiling issue likely not to get resolved until The last hour possible. Let me finish this thought, Jim. I'll get to that question. So the last hour possible would be just the Tuesday night because we have, let's see, is that correct? Let me look at my calendar. So Wednesday night. Needs to pay their debts no later than June 1st is what Treasury Secretary Janet Yellen said. And I would imagine our Congress is going to drag things out as much as possible. Probably, I wouldn't think to just drag it out, but they use this as a negotiating tool, kind of with guns at each other's heads. Republicans are wanting some concessions from the president on energy stuff. They want to make it easier for drilling, um, which, to be honest, is going to be one of the better things to help our inflation. They're wanting some things reined in on spending, and they want to get rid of, take some COVID relief funds off the table as well that were unspent. So kind of not anything crazy that I can point to. I feel like there's obviously going to be some compromises on both sides, but I have no real doubt that it won't get done. It has to. Um, yeah, they're likely to go continue work through the 3-day weekend. We've got Memorial Day Monday, so our market is closed. So 3-day weekend for us, but they're going to be hashing things out and hopefully they'll get it done. So obviously, since we're still dealing with that, you can see why it made sense to have 92 puts on for Disney as it sinks down to 88, which is just could get to 85, but it's just kind of ridiculous, to be honest. The idea that Disney is trading below where it was, or at least close to where it was, let me see, when the whole world was locked down in 2020. So this is July 2020. Oh, sorry, that's 2022. I need to go back a little further. 3 years. Maybe you need to go 4 years. There we go. I'll just zoom in here. The low is way down here. Intraday low, well, I guess I can't tell from here, but it is 95. 93 was the close on this day, March 17th, 2020. So you're telling me, oh, here we go. It's not the right date. It was 88, 79. So around 80 bucks. So you're telling me that Disney in all that time gaining subscribers, getting their streaming networks going, getting um, parks and movies back online, billions of dollars made through this time frame, and Disney is only worth what it was when the whole world was shut down, when their parks were shut down. It's almost comical how much Disney is undervalued right now. It's just so silly. But that's where we are, and we've been able to add hundreds of shares for clients, and we'll continue to do so as we can. We certainly made a nice chunk up from 102 down to where we're at today. Geez, unbelievable. It makes me angry to even think about, but that's where we're at. And so those were the reasons. We also, as you guys know, have a transfer of assets of our clients' accounts to a new broker. So we wanted some protection through that time frame. What do you think is going to happen when the debt ceiling issue is resolved? Get that a minute as well, Jeff. Um, Once this gets resolved, I would think everything's going to start to head up, at least for a few days, a good week, too. Obviously, that risk off the table, the market's going to take a sigh of relief. Things are going to start to turn around. We also have um, rate hike decision. I think it was June 14th, mid-June, I'll say. All I will say for now is watch the markets run up if we get word of of rate hikes being paused. Just to see our Fed say, you know what, we've done enough. We'd like to continue to see where things go. And of course, it's not going to look good as usual if they keep hiking rates. 25 basis point might not be crazy out of what people are expecting, but we might even get a run up into after this rate, after the debt ceiling issue is resolved, we might get a run through mid-June in our markets, and then kind of volatility there that week of the rate hike decision as people hope that they are going to pause their rates. And but I still think we probably continue to head up nicely if a rate hike pause comes up as well. All righty. That's that. We talked about Meta, bull call. I wouldn't be looking at any trades really, because there's really everything is news driven right now. It all has to do with the debt ceiling issue. That's really it. We had a bounce today because Nvidia had a fantastic earnings. They're up like 15%. So kind of crazy. They've only gone up from the beginning of the year. That's really it. That's the only reason we're up today. Let's see if, yeah, came back a little bit from the highs, but we're still up. So yes, I'm not going to suggest a trade unless it's some sort of portfolio protection just to get through a little bit of volatility and just get us through this debt ceiling issue. A couple questions that came in. Jeff asked, when you do, sorry, Jim, I thought that was you that asked this, but Jeff asked, when you do record these sessions, where do you put them on your website? I went looking several weeks back and could not find them. So we have our advisor site that is just the plain vanilla per regulatory requirements. I mean, it looks like any other advisory firm website. That's hurleyinvestments.com. We also have a hurleyoptions.com. But what you're asking for is my Hurley, investment, singular, no S on the end there. This has all of our videos that we record for our webinars. Every single one that we can record, we recorded those. This one's the one from the 18th. Yeah, so it looks like the video didn't record for mine last time, but do have my Word doc stuff here. That really pisses me off, to be honest, but here's Kevin's market commentary on May 8th. You want to know more about the debt ceiling issues, he goes over that. You can also go to YouTube if you really want to, but on our website, on myhurleyinvestment.com, you get the notes that we take in case that's of interest for you. But Jeff, I imagine you went to our main website and not the webinar website. And we're leaving Schwab because their business practices have been really frustrating. We haven't been able to do option spreads for IRA accounts, which is a huge disadvantage. If we have something like a protective put, protecting shares of stock, and we want to save a little money and not have protection all the way down, or after an earnings report and the company did great and it's going up, to add a short below the long put to pay off some of the premium on the long, all those things that we can do to make things a little less expensive on our put protection, we're not able to do for those. And for several other frustrating reasons that we just don't understand why they do the things they do, we're just going to leave. So that's kind of it. We're going to Money Block. Just a small place, but nothing fancy, but they're going to let us do what we want to do. They are going to give us better trading fills as they haven't gone to the zero commission trades, which of course sounds nice for the consumer, but it doesn't work out in the form of good trading fills and good timely fills and that can be very frustrating. Obviously, if they're going to offer something for free, they're going to take money from somewhere else to make it work. They do that by um, charging more on their mutual funds and other little things that they offer. Nothing is free. Everybody needs to get that in their heads. There's no free lunch. It's just a marketing ploy. So MoneyBlock doesn't do that. They have I can't remember what they cost per trade, but it's like $5. But you get better fills, better service, and they're just kind of a smaller outfit that can give us more direct help if we need it, and yeah, better service. So that's just how it is. And that's really it. Let's just see. You can see we've got pretty much everything protected. Apple having a big bounce today again because of Nvidia. But we've got protection there. We've got protection for Boeing, which is really nice. That's up at 205. It's trading just below 200. Bank of America, Baidu, a lot of stuff just isn't moving anywhere. Disney's not looking great today, but we have protection making up most of the downward movement. But again, I would expect most of this to just bounce back once our issues are resolved. Micron having a good day, thanks to Nvidia. Let's see, Visa, we have covered calls with no puts under it. Because we've got a covered calls, we have a level of protection there, but we'll book a nice profit on those, assuming they expire worthless, or we can just close them. But that's a good couple dollars there of credit we got on that. And yeah, that's pretty much it. Most everything else has puts on it. All right, any last questions? Jeff, did I answer all your questions? Perfect. All right, guys, that really does it for me. I hope you guys enjoy your long weekend. Obviously, I think Kevin's webinar is going to be pushed to Tuesday night since we have a Monday holiday. That's what I would expect, but check your emails because he obviously schedules everything there and will tell you what's going on if there's anything different. So I would expect a Tuesday night webinar. And no more questions coming in. You guys have a good weekend. Oh, here's something. Thanks, Jim. You guys take care. Bye now.